Hey guys, and welcome to the Working Money channel. All right, we got Raoul Pal this morning. Correction, we don't know the bottom is in. We just know we are in the bottoming zone. So he was retweeting out Quentin's tweet here. Bitcoin bottom is in. Global money supply is pumping. So Raoul Pal did show this chart the other day. We are seeing the M2 money supply that is pumping. And Raoul Pal's just correcting us. We don't know if this is in fact the actual bottom. If we did finally see the Bitcoin bottom, I mean, theoretically, it could go even lower than it already has. Right now, as of the time of this recording, one Bitcoin is going for about $81,700. We did see Bitcoin go down as low as 81,000, almost 81,003. So here we go, guys. This is the bottoming zone. Of course, this is also Bitcoin on the hourly. And if we throw this on the daily, and I'm just going to adjust that chart here, you guys can see Bitcoin did actually move further down back earlier this month. And this is the last day of the month. The month is closing off pretty soon. It'd be interesting to see where we are on the monthly time frame. Whoops, that's the weekly. Let's take a look at the monthly real quickly here. So this is Bitcoin on the monthly. And as you can see, although we have seen quite a bit of volatility in March, let's just get rid of some of that. We did see a lot of volatility in March. We did see a long wick up here, longer tail, shorter body. And I mean, if we close out this month, that is a good indication that we could be reversing in the month of April. So a reversal candlestick, hopefully we do see that trend reverse in April for Bitcoin and for other cryptocurrencies like XRP. This is XRP on the monthly, and wow, look at that wick and look at that tail body remaining very, very short as well for XRP on the monthly. So another good indication that a reversal is on the table. Next stop for XRP, guys. Where do we think it's going to go next? Here, let me throw this on the hourly, and for a more detailed analysis of where I think these prices are going to go, you can follow me at patreon.com/workingmoneychannel. As you guys can see, XRP is pretty much perfectly hitting these Fibonacci zones. So it's looking as though we can use the fibs and some other tools as well to best predict where XRP is going to go next. Of course, we do have to clear all-time high, which is now $3.40. But to be honest with you guys, it is looking very, very promising considering we have been just consolidating in this zone in here. We've just been kind of moving sideways. And now we're ready for that moonshot. We've got the fear and greed index now in the 20s. We were in the 30s a few days ago, but unfortunately it has moved back down. Of course, there are macroeconomic factors, reasons for that. So now we're at 24, altcoin season not showing up anytime soon. We're only at 17 out of 100. Market cap is down by a little bit and volume's down by a little bit, albeit, when we're seeing the market move down to the downside or even to the upside, these are not by, the indication is not by a lot, only by a few percentage points here or there. So it just kind of means, we're still just kind of trading sideways by and large. I know, looking at your crypto portfolio when XRP was up near $2.50 and now it's at about $2.10, or rather $2.08 as of the time of this recording. I know it doesn't feel great, but ultimately, guys, we are in this wait and see period. We do need to wait for some more macroeconomic factors to play out before we do see a burst of liquidity enter the market. Scott Melker posting Peter Brandt's tweet here. Apparently, Peter Brandt is warning XRP could face a 50% drawdown. So, is this bearish to you? I mean, I look at this and I think, no, that's a perfect setup. I know we've been retesting the support level a few more times than I'd like, but at the end of the day, guys, we're still just waiting for those macroeconomic factors. Nevertheless, Peter Brandt is saying, don't shoot the messenger. My favorite, or rather your favorite, Beanie Baby Pet Rock Crypto displays a classic complex head and shoulders top. First of all, he's calling XRP a Beanie Baby Pet Rock. He clearly has no idea about the utility. I guess he's just looking at this from a technical standpoint at the moment. This could become bullish if 3.0 is executed. Otherwise, the implications is a decline to $1.07. So he's saying we got to hit $3, guys. We got to hit $3. If not, we could see $1.07. I have a feeling that $3 is more likely than $1.07, especially at this juncture. We've got bullish tailwinds bringing up the rest of the crypto market, so let's not forget that. XRP Crypto Wolf posting this. Bitcoin ETFs are skyrocketing by 200 million. And whether you care about Bitcoin ETFs or not, this is a good sign. However, it does say hidden red flags are emerging based on this. So Bitcoin ETFs attracted $196.4 million, a big increase but one that did not quite translate into sustained enthusiasm. Then Friday, March 28th was the day of the turning point as presented by Spot on Chain. After 10 days in a row, Bitcoin ETF inflows, the streak was broken. But even with this shift, the total amount of money flowing into Bitcoin ETFs barely moved. It was paused briefly. It looked like institutional investors were holding back. So what is happening with Bitcoin ETFs? This kind of uneven activity suggests caution, not a trend. The demand for Bitcoin ETFs is still there, with almost $200 million in inflows, but the sudden stop suggests that the market is grappling with uncertainty. And yeah, I mean, I did talk about a potential for a black swan event, and the fact that Bearable Guy could have been pointing to that all those years ago. If you guys didn't catch the video I did yesterday, I will link it up here in the top right-hand corner if you're interested in that kind of stuff, the Bearable Guy stuff. But here's Spot on Chain saying, spot ETFs, okay, 196.4 million to BTC and about 8.7 million to Ethereum. That was the week of March 24th to the 28th. The last trading day of the week was Friday, March the 28th, and that marked the end of the Bitcoin ETF's 10-day streak of inflows and the Ethereum ETF's 3-day streak of outflows. So you guys can see that here on the chart. It could be macroeconomic conditions, which I personally think it is, short-term price fluctuations, or maybe investors just weren't ready to commit beyond a certain threshold. But Bitcoin still gets a lot of attention from institutions, but that attention is not really turning into buying. Now looking at Ethereum on the other hand is still trying to catch up. ETFs linked to Ethereum saw $8.7 million in outflows over the same period, which is less dramatic, but still a sign that investors were not rushing in. Ethereum, I feel like, has lost its luster in a lot of ways, but I guess institutions are still purchasing it. After 3 days in a row of capital leaving Ethereum ETFs, the outflows finally stopped on Friday. So these are the signs that we're seeing currently with regards to the institutions. They've even stopped buying up. Luckily, though, guys, we have some other metrics to suggest that, yes, even if we're not seeing the buying in the moment, we are definitely seeing a broader macro trend of institutions buying up crypto-related products. A survey says that 76% of U.S. investors plan to boost crypto ETF holdings in the coming years. So again, we're not seeing it at the moment. It doesn't matter. Financial services firm Brown Brothers Harriman, they just published the results of their 2025 Global ETF Investor Survey on Monday, and the data shows that more than 3/4, so 76% of Americans, expect to increase their investment in cryptocurrency-focused ETFs over the next 12 months. Demand for crypto exchange-traded funds appears to be highest in Asia at 80% and lowest in Europe at 56%. Americans lie in the upper end of the two extremes at 76%. The U.S. Securities and Exchange Commission approved multiple spot Bitcoin ETFs in January of last year, leading to a crypto ETF gold rush. So that is why we did see Bitcoin price rise before the halving a bit prematurely if you compare that to other crypto cycles. But guys, it's a good sign. It's good news. BlackRock's iShares Bitcoin Trust has been particularly successful, garnering more net inflows than any other crypto ETF. The fund has swelled to more than $50 billion in assets at the time of reporting, with a return of 113.61% since inception, according to BlackRock's website. The Fidelity Wise Origin Bitcoin Fund is the second largest Bitcoin ETF with just under $20 billion in assets, roughly a third of IBIT's asset size. So giving us some more details about the specific Bitcoin ETFs. But, just overall looking at U.S. investors and the habits that we're going to see for U.S. investors, 76% plan on investing in these crypto ETFs in the coming year. So that is good news. We also have, Elizabeth Warren being furious with David Sachs, I think is also some pretty good news here, courtesy of Jungle Inc. He says, Elizabeth Warren just sent a scathing letter to Trump's crypto czar. Here is what it says. So I've got the letter down here if you guys want to read the first two paragraphs. But ultimately, Jungle has synopsized the points here. Sachs accused of conflict of interest with XRP, Solana, ADA, and Bitcoin and Ethereum. Trump's crypto strategic reserve named XRP as one of the first picks. Sachs's firm, Craft Ventures, invested in Bitwise, holding all 5 tokens. Warren also questions if insiders sold into the pump after Trump's post. She asks if Melania and Trump's meme coins, the Trump and Melania coin, got SEC cover. SEC dropped major cases like Coinbase and Justin Sun shortly after Trump took office. Defends full financial disclosure and timelines of divestment from Sachs. Wants names of anyone who knew about the XRP announcement ahead of time. So Elizabeth Warren sounds like going on offensive mode here. We don't care though, guys, right? At this point, XRP holders are in such a good position. This is all just noise trying to shake you out. And, when we talk about those macroeconomic factors, this is a small part of it, but, it all plays into what is happening globally with markets around the world. Again, remember, if you take a look at the S&P 500 and you take a look at the last trading day, I'm recording this before markets are opening on Monday, and this was Friday. Compare that to the crypto market. I was hoping we would see a bit of an uptick, but crypto market also down a little bit. So we are probably going to see another down day in traditional markets. That is my guess once markets do open. But trading cryptos and crypto utility, those are two different things, very, very different. One of them is speculative, and one will get prices up higher than ever because of real demand. And so Anders here posting this. I can't wait for the Ripple versus SEC lawsuit to officially settle, because remember what happened with Bank of America. Remember when Brad Garlinghouse did comment that Bank of America was one of their first partners, I think one of their first American banking partners. And he said at that time that they would be very willing to leverage Ripple and XRP for their cross-border payments, but it was just a matter of the regulation. And, he was very, very confident at the time that Bank of America was going to be that first company, that first bank, first American bank that gets on board. Remember, though, Bank of America's relationship with Ripple in April of 2020, the partnership with the Bank of America was confirmed by Julie Harris. So she also mentioned it, the head of global banking at Bank of America, during an episode of the bank's Treasury Insight podcast. Ripple was mentioned there. Also, CEO Brad Garlinghouse reportedly said at Swell 2022, so that's when it was conference, that the Bank of America would gain a competitive advantage by using Ripple's on-demand liquidity, their ODL product, once the ongoing litigation with the U.S. Securities and Exchange Commission is resolved. And guys, it has finally been resolved. Not officially, but for all intents and purposes, it has been resolved. So there's the American banking end of it, but we also got wind of this. Ripple's VP of stablecoins, Jack McDonald, and Superintendent Adrian Harris of the NYDS working side by side to advance technology. This courtesy of Chad Steingraber. Just recently, Adrian Harris launched the TRE, the Transatlantic Regulatory Exchange, to collaborate with the BOE on digital assets. So guys, this is big for the RLUSD specifically. Superintendent Adrian Harris launches the inaugural Transatlantic Regulatory Exchange with none other than the Bank of England, which is also a confirmed Ripple partner. We're thrilled to announce we're thrilled to partner with the Bank of England in this kind of exchange for the very first time, working together to strengthen regulatory frameworks, protect consumers, and support innovation. This is a quote from Adrian Harris. I also wanted to remind you how important it is to get these licenses and actually how difficult it is as well. Here's another clip, courtesy of Subjective Views, an interview with Adrian Harris. Listen to this.
Let me ask you, what have you been doing as a digital asset regulator? And there was a question we got online from Columbia University's Abby Joseph Cohen, who asked specifically about your thinking on consumer protection in digital assets. So big picture digital assets, and then specifically to Professor Cohen's question about the consumer protection, which ties to your worldview.
Yeah. Well, so the digital asset space is such an interesting one, right? Because you hear so much, especially in Washington, prior, right? Don't regulate it because you will legitimize it. And then, sometimes I would talk to my fellow regulators around the country and around the world, and they'd say, well, we don't understand the value of these things. Like, why do they exist? And my view is that that's not really the regulator's role, right? The instruments are here, the products are here, they can do a lot of damage, they need to be well regulated. And so DFS is really the only prudential regulator, right, really active prudential regulator in the country around digital assets. So we have, as you noted, the BIT license. So in order to do virtual currency business in New York, you have to be licensed by DFS. You can do that either through the BIT license or through a limited purpose trust charter. The licensing is an incredibly rigorous process. So for instance, FTX made known that they were seeking a license in New York. They did not get one, nor did Voyager, nor did Celsius, right? Any number of other companies. Then we have full scope examination and supervision. So the same way we examine banks and insurance companies, right? We have a team of examiners. They go in, they examine the companies at regulated interval or regular intervals. They have MRAs and MRIAs, and when we need enforcement actions, and we can talk about that. We've done now, in addition to the regulations, 9 pieces of regulatory guidance. So the only guidance out there on stablecoins is DFS, and has really become the basis for a lot of the bills that's been working their way through Congress. customer service, blockchain analytics, market fraud, all these things we've done guidance on. And so you see, but this goes back to, I think, the first question, where we have really rigorous standards. It's all very transparent. And then you see that we have responsible companies regulated in New York, and the market there continues to grow in a responsible way. And, no company is perfect, just like banks and insurance companies. We bring enforcement actions, and we've done so with crypto. So we brought a $100 million action against Coinbase. In fact, I brought the first enforcement actions in DFS against crypto companies, even though we've had the authority since 2015. We brought a $100 million action against Coinbase, a $30 million action against Robinhood. Most recently, we had an action against Gemini, where we were able to get over $2 billion in virtual currency back to consumers in the form of restitution. I actually got this lovely note from a gentleman in Ohio saying, thank you for getting my virtual currency back. I'm going to come and spend it in New York. So I sent that to my boss, like, DFS does tourism now. We are a multifaceted regulator. So I think on the consumer protection piece, right, we've got the rules and the guidance on the front end, and then when we need enforcement, we bring enforcement actions, right?
Well, I fear you may need to be a little more on the enforcement side if Washington does a pivot from being heavily on enforcement. I mean, the SEC brought a lot of enforcement cases the last few years, some of which they won, some of which they lost. But if the enforcement officers take a dirt nap and they all get sent home, and some 19-year-old Doge employee just says, you guys go back. Well, you guys may be the last people left standing.
Well, look, I mean, this is the beauty of having transparent rules. Is everybody knows what the rules are. You know when you violate them, right? So we don't do regulation by enforcement. The rules are right there for everybody to read and see. The guidances are right there for everybody to read and see. So when we have violations, and by the way, the same cybersecurity regulations that apply to our banks and insurance companies apply to our regulated crypto companies. The same BSA AML regulations that apply to our banks.
Bank Secrecy Act and anti-money laundering, very important in the crypto space.
I'm going to leave it there. I will link the video in the description, basically explaining how rigorous the compliant is with the NYDFS. I think she probably went into more detail than I needed to show you guys, but I think it gives you guys a good idea of how this framework is transforming. And considering now Ripple has an NYDFS bit license, that is the piece, the important piece that I think we should take away moving forward. So they got that all the way back in 2016. Recently, Congress has been touting the NYDFS as a leading regulator for crypto and digital assets in the country and around the world. So kind of the gold standard for regulatory compliance. And let's also make note of this. Jack McDonald, Senior VP of Stablecoins there, with Adrian Harris, Superintendent of the NYDFS. Both in the same room. And is that Lauren Believe? I think she's from Ripple as well. I'm not entirely sure on that. But there you go, guys. The discussion was around the evolving landscape of crypto asset regulation in the US. They explored the coordination that would be needed between domestic and international regulators to build a framework that balances innovation and market stability. So all the pieces of the puzzle, they're all coming together. And, we knew this was going to move like molasses. Bearable guy. But Anders has a theory here. I mean, it could have been moving a lot quicker had we not had the beer flu disrupt, I think, the flow of things. Anders saying, he has a theory about Brad Garlinghouse stating on live television that dozens of banks were going to use XRapid. At that time, it was called XRapid. Then it changed its name to ODL. Now it's called Ripple Payments in 2019. And what went wrong? His theory is that maybe Brad expected Hinman to include XRP in the famous speech where he declared Ethereum a non-security and thus spoke too early. If you look at the dates, Brad Garlinghouse made his statement on live TV on June 5th, 2018. Hinman gave his famous speech on June 14th, only 9 days later. With clarity that XRP is not a security, banks would have felt safe to use XRP in their payment flows. And this is, at a time when we were all thinking, XRapid utility is going to happen very quickly. And at that point, we were thinking XRP was going to soar. Instead, the SEC went silent on XRP. Jay Clayton obviously mentioned the lawsuit on the same day that he decided to quit or to step down. So what would have happened if XRP would have been included in the Hinman speech? Things that make you go, For those of you guys who were not here way back then, I do want to remind you that, when Brad Garlinghouse did mention XRapid, I think it was, he mentioned something about XRapid. Yeah, it was a big announcement at Swell. I think it was Swell 2018. It was in and around here. That is what got XRP from 27 cents per coin after it had seen a huge decline from the beginning of the year, and it had gone up. This was a pump, FOMO pump based on this news, almost went up 200% back in late 2018. I remember where I was. I was out with a friend at the Cheesecake Factory, saw this on my phone and thought to myself, okay, this is it, guys. And it was based on that XRP announcement, of course. Now things are very, very different. We are entering the real world utility. It is coming very soon. We are seeing Ripple employees in the same room with regulators more often. So sit tight, guys. Q1 2025 is already over, but there are still 3 quarters left and the ride is only beginning. That's just my opinion. And if you want to hear more opinions on where I think this bull market is going to go, check it out, patreon.com/RookieMoneyChannel for more information on that. And please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.